welcome back. You're watching All About Stocks on ET Now. I'm glad you stayed with us. Like I promised, Prakash Dewan of Ashishti Mehta joins us now to help us find the right investments in markets like this. Prakash, thank you so much for finding the time to spend the weekend with us. Now, before I go any further, I want to ask you about that meeting of economists we saw in the States, the message that came in from the Fed chairman refraining to mention any new measures to revive that economy. We know that the American market reacted, it went down a bit, but then it picked up again. But in the long term, what impact do you expect this move to have on the Indian market?
Sentimentally, yes, it's a big negative because it would mean that everybody would be left to their own devices. And when I say everybody, most nations, most economies, most markets would have to start looking at their localized means to make sure that business doesn't get affected and life comes back to normal as far as the economic cycles are concerned. And that could, in a way, make people give up a lot of hope, which is what everybody is kind of pinning on. And it kind of changes the sentiment in a way. There could be some numbness, and that means real positive action might take much longer to happen. And that would again imply for Indian markets that the revival would be much more longer and painful than what we are anticipating at this point in time.
All right, let's move on now to your recommendations. We know that the market, like we were talking about earlier in the show, ended the week below 16,000, which is an uncomfortable period for us because we haven't seen these levels for the last 18 months. And it also means that for retail investors like you and me, there are a lot of very big stocks that are now available at very affordable prices. Now, Prakash has picked two stocks that he thinks we should be buying that will make us rich in the long term. The first of the two is a value recommendation. This is Aditya Birla Nuvo. Now, for those of you who have not been tracking this company, you're not really familiar with the business the company is in, my colleague Darshan has put together this quick introduction on what Aditya Birla Nuvo does and how that stock has moved in the last 1 year. Take a look.
AB Nuvo is a $4 billion diversified conglomerate and the holding company of several of the new businesses launched by the Aditya Birla Group in India. The company is the largest shareholder of Idea Cellular, holding 25%, and it also owns 74% of the unlisted life insurer, Birla Sun Life Insurance. The company manufactures clothing and retails them for its brands Louis Philippe, Van Heusen, Allen Solly, Peter England, and The Collective. Besides this, the company also makes textiles, insulators, fertilizers, and carbon black, which is used in the manufacture of car tires and paint. AB Nuvo also has a financial service and a BPO arm. Under the management of Chairman Kumar Mangalam Birla, its razor-sharp focus on each business has made it a leading player in most of these segments. Let's take a look at its numbers. The company's net profit has been on a steady rise over the last 3 financial years. Over half of its revenues in FY11 came from its life insurance, telecom, and garment businesses combined. See, the stock is currently trading at a PE multiple of 10 times, and analysts feel that for a company like this, it is fairly valued. Secondly, if you're looking at, you have to watch the business aspect. They are into so many businesses that on a conglomerate level, because of this presence, the risk level has actually gone down. And thirdly, what the company has said is that, at a later stage when they become big, they would want to list the finance division, the IT division, and this in turn will actually unlock a lot of value for shareholders.
Thanks, Darshan. Well, Prakash, I'm looking at this business right now. The diversity of this business is most interesting. Like you said, it is really, it's like buying 10 businesses through one stock. Tell us why it made the cut to be on your list as a recommendation that we should be buying now.
It's like today when you look at the blue chips or the large cap stocks, the frontline stocks, usually you don't associate them with value, but for a change, you actually have a holding company that in turn owns some of the largest companies in their respective sectors, be it insurance, be it the manufacturing side, be it the textile side, or be it also, of course, on the telecom side. Now, if you have somebody from the telecom, financial services, and some of the other businesses also owning these large blue chips, and those are available at attractive values, it makes sense. But now with limited amount of investments, I will not be able to get that diversification if I buy individual stocks. There is an holding company managed by a group which is known for its business acumen. And all of us know that even in terms of corporate governance, which is what people are looking at when they invest for a longer term, you don't have at least any issues with this particular group. Aditya Birla Group has come up clean on all counts, all fronts, never been associated with anything negative. So I would put my money into a stock that gives me the leeway to kind of hold on for 3-5 years longer term without any kind of blemishes, with businesses that are part of sunrise sectors like insurance and telecom, market leadership intact, and there you have the perfect recipe. The only problem with this company was people could not put a fair value on it all this time because of the complexity, as you rightly said. It's quite complex. People don't know much about it, didn't know much about it. But then now that people are looking at real value, scouting for value, I think that's where this comes on top of my list.
Right, this is really a value unlocking theme. We know that the life insurance business is nearly 10 years old, which means that according to regulations, it can list soon. The company is considering listing its BPO business as well. So for an investor who gets in now, how do you think these listings will boost that stock? What are your expectations from it in the long term?
You know, the businesses they are in, if you do a sum of parts valuation, which is normally what you would do with a holding company, the insurance and the telecom business are now contributing the lion's share in this company's bottom line, whereas the manufacturing businesses and the BPO business also has come down over the last few quarters. Now that's in a way good news because they were actually dragging down the overall valuation for this company. So given the fact that insurance, which is an imminent listing, let's say in the next 2 years, if not immediate, and the telecom business also continues to grow at a fairly even clip now that we are clear with a lot of issues that the sector faced in the past year and a half. I would believe it's a stock that could grow very comfortably at a 22-24% CAGR for the next 4-5 years. And when I look at value, I would rather be associated with a stock that gives me assurance of sorts of appreciation rather than just a quantum as well. So this is a stock which could give you become a multi-bagger in the next 3 to 5 years, and then I would not be worried with the margin of safety being so high.
All right, finally, what's your target on this stock for the next 1 year? Do you have a target that you're looking at right now?
Safely, I would assign it 1,000 plus kind of a level for the next, in the next 12 months. But more assuringly, it would continue to grow at, as I said earlier, at a 20-24% CAGR even beyond that 12 months over the next few years altogether. So 1,000 plus about 1,080 is a safe bet if you ask me the specific valuation. Otherwise, it definitely is something that could be looked at for the long term as well.
All right, that's first recommendation from Prakash. Aditya Birla Nuvo, remember he said it might be a multi-bagger in the next 3 or 4 years, and he also assumes that it will give us a compounded annual growth rate of 25 to 26%. Let's move on to the second recommendation. This is GMDC, the Gujarat Mineral Development Corporation. 75% of this company really is owned by the Gujarat government. Here's an introduction into what the company does and how that stock has fared over the last year.
The Gujarat Mineral Development Corporation, or GMDC, was set up in 1963 by the government of Gujarat, which also owns 74% stake in the company. GMDC is engaged primarily in lignite mining in the same state. 6 years ago, the company also ventured into power generation by setting up a 125 megawatt lignite-fueled power plant. Today, the company operates 250 megawatt lignite-based and 20 megawatt windmill-based power plants. The company also invests in property. Let's take a look at its numbers. Its net sales have increased steadily from 980 crores in FY08 to 1,414 crores in FY11. Net profit grew from 263 crores on FY08 to 374 crores in FY11. So if you're looking at the stock price per se, the stock has given a return of more than 50% to investors over the past 1 year. Coming to the business aspect, what they want to do is they want to double their lignite mining capacity in Bhavnagar and Kutch. They've already done the technical survey for the same, and they have already applied to the government officials for permission to do the same.
Right, Darshan. But Prakash, if I pull up how the stock has performed maybe over the last 4 years, we saw that in 2007, it had the highs of nearly 3,000 rupees. Do you expect it perhaps to test those levels again in the next few years?
No, not really. I mean, that's something that structurally has changed for the company, of course, with the corporate action that has taken place in the intervening phase. But I definitely believe that, the 60% whereabouts of compounded annual growth rate that it has clocked in the last 5 years in its bottom line and equivalently even in the top line is something which is remarkable about this company. They have, as you correctly mentioned in the introduction, it's owned by the government of Gujarat, which is one of the most industrial-friendly states that we have. Given the fact that it has unhindered kind of ownership of mines and exclusive rights to the mining business there, and you've seen the kind of issues that we're facing with mining elsewhere in states like Karnataka and Orissa. This is a company that can possibly give you, again, is a multi-bagger, but probably not go back to those levels because those are, of course, structurally very different and the market dynamics have changed. But at this level of sub 200 rupees, I think it's again a bargain buy.
And we know, of course, that the stock has given its investors nearly 50% return on their investment over the last year. What's your target for the stock in the next 12 months? Do you think it can repeat that kind of performance?
Maybe the base effect might not let it, give out that kind of a return, but I would still believe that about a 25 to 30% appreciation is distinctly possible, especially now the fact that it's available at valuations which are not yet, unreasonably high. I would reckon that on FY13 estimates, it's probably about 11 times that you're buying this stock at current market price. So which is really not high as compared to the historic PE bands that it has traded on. So I think about 25 to 30% is a comfortable target for the next 1 year. And going forward, importantly, it could continue delivering those kind of returns or even higher returns because the mining capacities that they are adding will actually kick off only end of FY13 and early FY14. So once that happens, you again have better margins, higher volumes, and the stock would continue to rally further also.
All right, two recommendations are coming in from Prakash. A quick recap: we talked about Aditya Birla Nuvo and we talked about GMDC. We're going to slip into a quick break. On the other side, we're asking some of the questions that came in from you. Find out if you should be holding on to your infrastructure stocks in a market like this. That's after the break.